The stock market is in one of the weirdest phases we have ever seen. We have seen immense run-ups of NVDA, but also Micron Technologies and many others. And then we saw the stocks drop for no good reason besides or despite enormous gains in earnings, blowing them out of the water with outlooks that are just mind-boggling. And today we are going to talk about what that all means and why it's a little weird and why this time the market might be wrong and understand that it's wrong very, very soon. And let's get it started with that little overview. This post I did on X, thanks to August Erkan, who did the original post. What I said here is absolutely crazy what's happening in the market. Dramatic undervaluation for Mag7. Hard to explain why, just buy. The market is basically implying that massive growth and massive profits can't be sustained and that profit growth will dramatically fall in 2027. That is the implication of the market right here, and I don't think it's thought through well. All the evidence points to the contrary. Let's take a look what Erkan is posting here. This is not the entire Mag7, but it's very representative of the problem. Look at these insane numbers. We have NVIDIA, we have Meta, we have Microsoft, we have Amazon, some of the most iconic and important companies in the world. So we left some out here. We will talk about Tesla, who's part of Mag7 in a second. Apple is not in here. And so let's take a look what's going on here. You see the revenue CAGR growth, right? Projected. NVIDIA is projected to grow at a staggering 26.2%. And that's very similar to the EBIT growth projected, to the earnings growth. 26% growth, okay, that is what we assume. Meta is projected at 17.8. I think Meta will surprise to the upside. By the way, Microsoft 16.6, that's probably accurate. Amazon 13.7% growth. Who knows? Who knows? It depends how well they build out their data centers, how good they are with Trainium, their own chip. I think there's a little upside here potential. Microsoft, we never know. But look at NVIDIA, that is valued the lowest of all of them. And you see here the multiple, the price earnings multiple, price earnings forward, looking to 2027. And these hyper growth stocks, I mean, how else would you describe a stock like NVIDIA that trades at an unbelievable 15.7x forward multiple? And grows at 26% every single year projected, okay? And that is conservative these are the projections. That's not reality. In reality, I think they will grow faster because the demand for AI is insane. And everyone who thinks, and that is the core point here, that is the insight that generates you alpha and me. That is the insight that makes me different from seemingly what the market right now thinks. And the market thinks that AI is a hoax. That is the only explanation. The only explanation to give these companies all together a lower price earnings ratio than the Nasdaq. Isn't that insane? The Mag7, some of the fastest growing, most well managed companies in the entire universe are trading now lower than the market in terms of the PE. Look at this. We have macro trends here. I can show you the evidence here. As of July 2026, the Nasdaq is actually trading at a 23.68 price to earnings ratio. So the entire stock market, or at least the Nasdaq, trades at 23.68 multiple over the entire earnings of all Nasdaq companies. So all the cash that comes in, all the EBIT, not the cash, all the earnings that comes into all the companies in the Nasdaq. If you then sum up the entire market cap, the valuation of all these companies, and divide the total market cap by the earnings, you're getting to 23.68. But the best companies in the world that have massive, significant growth trade far below 23.6. Okay? That is nuts. That is nuts. And I think this is all based on the assumption that the market currently has, that AI is not sustainable, that the CapEx growth of these companies is not sustainable, even though the CapEx and the depreciation, the capital expenditures that they all have, this massive growth in CapEx is already part of that multiple. because the earnings take this into consideration, the depreciation of the capex. So that's not even the thing, but they're saying the revenue against it, we are not buying it. The market says this cannot be. These two numbers cannot be true together, okay? You cannot be at 26.2 CAGR in the future and trade at 15.7x earnings. Not possible. One of them must be wrong. The assumption is that number is wrong, 26.2. The market seems to think they can't grow at that speed and they can't continue growing at that speed, but we know that number is conservative because NVIDIA is booked out all the way through 2027 easily. So what is the assumption here, market? Mr. Market. Is the assumption that in 2028 suddenly no one will buy NVIDIA anymore? Is the assumption that in 2028, 2029, 2030 AI is not a thing anymore? That we won't need compute anymore? Is the assumption that our models are so good that they don't need any compute, which is totally bogus? Is that your assumption? Is your assumption that people won't use AI anymore? Is your assumption that inference demand will go down? Is your assumption that inference efficiency is suddenly exploding? You need to have pretty crazy assumptions. You either have to assume no one uses AI anymore, or you have to assume people need less inference per search. That makes no sense. Agentic AI will drive inference through the roof. Or you have to assume that somehow the efficiency of inference goes through the roof and we don't need that much compute anymore. Or you have to assume there's competition for NVIDIA. None of them, when you actually poke into them, can be true, at least not by 2030. Of course, by 2040, anything is possible, but it's much more likely that even then, NVIDIA maintains its lead. When it comes to the others, what is your assumption here? That Meta stops growing? That Microsoft won't figure out how AI works for them? Won't figure out the deployment? You can have all these assumptions, but going all in and pricing these stocks so wrongly is probably not a good idea, because these assumptions are based on nothing right now. And if you want to be conservative, being conservative is just another word for being wrong. You don't want to be conservative. You don't want to be aggressive when you invest. You want to be right. You need to aim for the most likely outcome. And the most likely outcome is that AI continues its march forward, that inference continues to grow insanely because it creates insane value, and that we will see tremendous incremental innovation in the agentic efficiency in enterprise and so on and so forth. Hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support, and let's get back to the video. Now, when we then look at our favorite stock, of course, Tesla. Tesla trades at a very high multiple right now, but that multiple is based on its current base case, which is 2026 EBIT earnings of $4.5 billion roughly. What people do not recognize is that robotaxi is an absolute game changer for the stock. So Tesla is in a little bit of a different situation than Mag7 because Tesla has the potential, not just the potential, is extremely likely to deliver a new product line any time now, but definitely in 2026. I would definitely bet on this being solved by 2026. You know the product line, it is robotaxi. And robotaxi, when delivered, self-driving cybercabs, okay? Self-driving meaning they don't have steering wheels, they don't have pedals, they just drive people around and you can just sit in them and they do the job. And that will replace all transportation eventually, but initially the ride-sharing market. And when you look at what that would do, what that does to Tesla earnings, it is absolutely transformative because 100,000 robotaxis make $5 billion in additional earnings, okay? So if Tesla can deploy 100,000 robotaxis by end of 2027, they will have a earnings growth, which is more important than revenue growth. They will have an earnings growth of over 100%. Okay, over 100% if you compare it with these guys. NVIDIA at 26%, Meta at 17%. Imagine now Tesla coming into the mix and having a growth rate of 100% or more. Most importantly, they will be able, once robotaxi works, of course, that is the inflection point. Once it works, they will be able, thanks to cybercab design and manufacturing capabilities, to scale that with 100% growth year over year for many, many years, 5 years or more. I would say potentially even 10 years. Because the demand for robotaxis is massively underappreciated. Morgan Stanley just came out and said they think Tesla will have 30,000 robotaxis by 2030. I don't think so. Here's a quick overview of what I think is going to happen in 2020. Let's switch this to here. In 2027, I think we will have 100,000 robotaxis very likely on the road. Okay, let's look at this. I think by 2027, we will have 100,000 robotaxis produced and deployed, which brings the fleet then conservatively to 100,000. The fleet is what makes the money, not the produced cybercabs. And this fleet would make them $5 billion, increasing their EBIT by 100%. It's 100% for the entire Tesla company EBIT growth, okay? But in 2028, what happens? We can easily assume if they can produce 100,000 and deploy them and FSD works perfectly in 2027, which when you look at the data, when you look at the facts, I don't think there is a scenario possible where this is not happening in 2027. I do think it will start to happen this year. I do think it will even start to happen in Q3, which is now, in July, in August, in September. That will be the starting point for this trajectory. And at that point, Tesla can grow to a fleet of 300,000 by 2028, which means it will increase its current 2026 projected earnings by 300% by 2028. It can then deploy another 400,000 very easily and grow the fleet to 700,000, meaning they can add $35 billion in EBIT, which is a growth compared to now to 2026 of 700%. And then, of course, they can continue 800,000 produced in a year. It's still absolutely within the Tesla range. They can easily produce 2 million cars right now. Cybercab is designed for being much more and easier mass producible than Model Y and 3 that are already produced at 1 million, roughly. And so the fleet would be 1.5 million, which means 75 billion in additional earnings, meaning 1,500% earnings growth for Tesla. That is the reason why Tesla trades at a very high multiple right now. Okay, Tesla PE multiple right now. Let's look it up what the latest is. Roughly forward PE is roughly 198. Okay, the thing is, when you understand this, if it's 198 but you grow at 300%, you have to divide this by 3. Okay, simple math, because the earnings are higher. You divide it by 3 and suddenly you're only at 60 PE. You divide it by 10 or 15. If you divide this by 15, you have an earnings ratio that is the lowest of the Mag7. Of course, that's in 2030. But Tesla, with the current price in 2030, just on robotaxi, not even on anything else, would have an earnings ratio that would be ridiculously low, like of 12 or 11. Okay, so this would be much lower than even NVIDIA, while not growing at 26%, but 100% per year. So isn't that interesting? That is why I think all of these stocks are a total buy. But my favorites are, of course, Tesla, because Tesla, what people don't understand about PE is what is happening to Tesla and how much is coming in. And of course, NVIDIA, because for NVIDIA, you don't even need any assumptions like robotaxi coming online. For NVIDIA, you don't even have uncertainty like with Tesla. We don't know when Tesla Cybercab will start to scale and being deployed, even though I believe it's in Q3, latest in Q4 this year. But these are assumptions. You need to have deep understanding of the technology and what's happening to get to that conclusion. For NVIDIA, you don't need anything. You look at the growth, you look at the margins, everything is clear. You look at the order books, it's insane. Now, are there stocks out there where you can make 3,000%? Of course. Do I know these stocks? No. Will everyone say it was obvious once they know which ones it is? Of course, but that doesn't help anyone. Here we have the safest bet I've seen in a long time with NVIDIA. In my opinion, a very safe bet with Tesla too, and much more upside. But these two stocks are my absolute favorite. I think the others here, especially Meta and Amazon, Microsoft, you never know how they will screw up. They always find a way to screw up. But Meta and Amazon, Meta is just very lowly valued, and Amazon, I think, is underrated with a 13.7% projected CAGR. The bottom line is, the market right now prices in that AI doesn't work. It prices in that AI is something that goes away. This is not the case. And I am a buyer of Mag7, especially of NVIDIA, and even more of Tesla. I hope this was interesting. See you tomorrow.